We are living in uncertain times. Will there be a double dip? How will government austerity blitzes impact the wider economy? Which emerging markets will sustain their growth? Now more than ever, our clients tell us they need to create space to react to whatever the answers to these questions are. With top-line growth uncertain and unpredictable, a continued focus on cost is inevitable. But things have changed. It's no longer about immediate cuts in headcount and reducing discretionary spend. The dieting phase is over. In recent surveys, our clients are telling us that they are searching for ways to create sustainable cost efficiency. So this is about growing by getting more profit from every dollar they spend, but doing it in a sustainable way. With credit markets still tight, our clients are seeking ways to release cash from underperforming areas of their businesses and then reinvesting these funds in the more profitable customers, products, countries and assets. This is a difficult balancing act, as it often involves a redistribution of funds between operating units or countries or channels of trade, and this poses two major challenges: where to dig deeper to release these funds and where to reinvest it. So firstly, digging deeper. It may not have felt like it, but the easy bit has been done. To release further funds, our clients are investigating more radical ways to structurally change the cost base. This often means changes to asset portfolios or changes to the operating model by removing historically imposed organisational or geographic constraints on the organisations. For example, challenging hard on what activity should sit in market and what should sit above market. These discussions often don't take place for a few good reasons. Firstly, the forum to discuss them just doesn't exist. Secondly, the upside value is poorly quantified to create the case for change. And thirdly, the perceived risk gets exaggerated to fit personal agendas and just maintain the status quo. So we have found that by applying a fresh, analytically driven look at these opportunities through the eyes of an external investor, without self-imposed constraints, creates a momentum and confidence at the executive level to go after these more strategic initiatives. But of course, ensuring there is transparency about the potential risks and providing comparator stories from other organisations that are already operating in a different way is critical to persuade decision makers to move forward on these types of issues. For less strategic options, what we are seeing is that the good old reliable techniques like zero-based budgeting are becoming more and more prevalent to dig deeper as they are highly effective. Getting folks to describe what they would do to operate at a level just to meet legal and regulatory requirements helps reset the thinking on what incremental value every extra dollar of spend truly adds. So the second challenge, where to invest. To drive more profit from every dollar spent, our clients often lack the transparency of the true product, channel of trade, customer or country profitability. Very often, internal charges and a poorly defined cost allocation key creates a blurred and inaccurate picture of true profitability. And again, through the eyes of an external investor, the entire dollar effort associated with generating the outputs from an area of the business is considered. This often requires breaking up the value chain into discrete parts to allocate true costs rather than averaging a large allocation. Without a really transparent and accurate picture of profitability, funding is often directed into the wrong products, the wrong channels of trade, and margin promises end up getting broken. So achieving this transparency requires some hard work to understand the true cost to serve. And like zero-based budgeting, these techniques are not new, but we are finding they're becoming more and more prevalent as our clients seek to ensure the right decisions get made in a tighter fiscal environment. Finally, I said our clients are seeking to get more profit from every dollar they spend in a sustainable way. Simply mowing the grass every year can be very deflating for staff with wave after wave of cost initiatives. There is a different way to approach this, and our clients are seeking to embed cost efficiency into the fabric and the culture of their organisations. Our clients are asking themselves, is cost efficiency one of our top 5 strategic goals? Are delegations of authority appropriate? Is cost efficiency part of our performance management contracts? Are cost metrics in place and tracked? All of these elements need to be addressed so that cost efficiency is embedded right into the DNA of the business. And that will provide our clients with the best chance of outperforming competitors during this recovery. So, cost efficiency is about getting more profit from every dollar spent. Recycling funds from underperforming areas into profitable growth areas is tough, and it requires an extraordinary focus. In these uncertain times, our clients are telling us this is not a choice, but an imperative.